everyone, and welcome back to Mish's Market Minute. I am your host, Mish Schneider. Y'all got to meet Keith Schneider last week, my other half, so you're back with me today, and of course we have a full packed half an hour here, so let's get going. Now, considering that I'm recording this on the day where the market dropped nearly 1,900 points, I had given some heads up ahead of this particular event through my dailies that you all will see on StockCharts on the where I have a whole section of all my articles. And we gave some clues in terms of VIX and the bonds and the gold market and also some of the other factors in terms of the modern family. So I want to go through everything with you, all the macro, see where we are, what we can plan for, and then hopefully end with one good trading recommendation. Now, this is what I'm going to cover. I'm going to cover, obviously, the economic modern family. We're going to look at both the daily and the weekly charts of each one of them. Want to look at the other three indices, the SPY, the Qs, and the diamonds. In those, we have some really classic chart patterns to look at, including island tops, exhaustion gaps, and reversal tops, and that's including the whole entire economic modern family, so I'm going to be pointing that out. Again, I think it's probably a good idea that you have a piece of paper and a pencil, because I'm going to give you a lot of levels to look at, if this, then that kind of thing. Then we're going to take a look at the typical safety plays that have emerged as a result, like volatility index, but not just the treasury bonds. I want to look at the junk bonds, and I want to look at the high yield grade investment, and then also gold. And then I'm going to end with a little bit of look at commodities, since I'm still with my stagflation theory, but oil is definitely going to be a part of that. Wood is more of an economic indicator, and then coffee is going to be my trade recommendation. Here we go. Let's get started right away. So I told you I was going to look at the weekly chart and the daily chart. So we're going to start here with the Russell 2000, as you know, the granddaddy of my economic modern family. And although NASDAQ went to new all-time highs earlier this week and the SPY was just a few percentage away from its highs, this did well, but did not get close. Now, on the weekly chart, you can see what happened. As of last week, it looked great. It cleared both the 50 and the 200 week moving averages, the 50 being the blue one and the 200 being the green one. And it looked like everybody was safe to get into the water. And that was what made today so tricky, or I should say Thursday so tricky, because we took out that high earlier in this week and then boom. Now here we are closing below both weekly moving averages, putting us back into a distribution phase. So we went from bullish to distribution phase in a day. That's how volatile this market is right now. However, we can see a 10-week coming up here. So I'm going to say if we can hold around this 135 level, and if by a miracle of miracles we get back through 144, that would be very positive. But if we can hold 135, great. If it breaks and you're looking for more downside, I wouldn't necessarily say this 131 is great support. It is support. I would say more we're looking back down at around 125, 124. Now, if we go down here, I did something a little different. Usually I do a price performance comparison to SPY. This time I'm doing it to gold. So you can see that this was actually outperforming the gold, and you started to see a lot of bears in gold. I wasn't one of them. And now how it quickly dropped below the moving average here to show that it's underperforming gold. And this is just its own real motion momentum indicator. This is real, gave me pause about getting long in the last few days of the rally. And that was because we could not clear back over the 50-day moving average. We got up to it and it turned out to be resistance. And now we're back below that zero line. Now let's just take a quick look at it on a daily basis, just so you can see what the difference here. We also had cleared the 200-day moving average. This was never in a bullish phase because 50 was below the 200. But nonetheless, yesterday was a good clue, because after being above the 200, and when I say yesterday, I mean Wednesday, it closed below it. So not a big surprise to see level of gap. The irrational exuberance in the market was getting very, very, well, too irrationally exuberant. But now, as I showed you about 124, 125 to 131 on the weekly, you see what's really even clearer here is this 50-day moving average. So I'm looking for anywhere from 131 to 128. If that breaks, maybe we get down to 124, and then we can start to say the market looks just as equally oversold as it did overbought. And we're looking at a little bit of a different momentum situation here on the daily chart, because again, it broke down under the 200, broke the Bollinger Band, and again now we'd be looking for some kind of support if it goes down even further, holding that 50-day moving average in momentum. Now this is Granny Retail. This is the weekly chart of her, XRT. Again, incredible amount of exuberance here as of last week, and then about face now breaking down on the weekly moving average, the 200, sitting here right at 40.50. So that is a definite number that I would write down for tomorrow. If 40.50 breaks, there's definitely going to be more downside in this particular sector. And a lot of this buying, by the way, was based on buying of things like Macy's and JCPenney and stocks that had actually declared bankruptcy. So you saw it show up here. But now we break 40.50. At the very least, we can see a move down to around 37.80. But I would be more inclined to think that we can get down to around 35, particularly if the other family members are acting that way. Now that's on the weekly chart. If we go here to the daily chart, that 40.50 becomes even more evident here because it sits right on the 200-day moving average. And that's why I say, even more so than IWM, the numbers I gave you, this is going to be even more important. A break under 40.50, and I would definitely look for a few percentage degree lower. And by any miracle of miracles, at this point, it would have to fill this gap in order to convince me that there's any strength in the market. Now, if we move down here, let's look at the real motion on the daily chart. It's sitting right on the zero. So when I talk about support, it really is at that support. So keep that number in your mind. Now, if we take a look at IYT, this is the transportation sector. And again, didn't quite have the same level of exuberance as we saw in Grandma and Grandpa. And that makes sense because this really is the demand side. And even though we're seeing pickup in demand in terms of cars and some freight traffic, etc., we're still not seeing lots of planes flying. And of course, any kind of scare that we get about a second wave would make this really even weaker. From a technical standpoint, we're going to look now at this 173.64 as your major resistance, if we even get that far. And again, since we're looking at a weekly chart, with this type of reversal, notice that we haven't yet broken the last week's low here. So right under the low of today in IYT, or under about 158, if that breaks down, we also break the low of last week. And I think we can see a move probably back down to around 145. Your momentum indicators never showed this clearing the 200 week here. It never cleared the 50 here. So now let's take a look at it on a daily basis. And on a daily basis, you can see here, this did actually go in line with the momentum when this was over the 200. This went over the 200. And then this actually broke under the 200 the day before we saw it in IWM. So transportation is a good lead indicator, not the only one, but a good one. And when I say 145, I think first stop would really be looking at 150 here, 149.50 or 150, and then we can see. I guess the big question that everybody's going to have on their mind, was this the top, or was this just a nice big correction after what seemed like a surreal rally? And that, of course, remains to be seen. Now, my most reliant, well, this isn't my most reliable, we'll get to KRE in a moment, but this is semiconductors. Now, semiconductors on a weekly chart is fascinating because, again, with this type of correction, if you're going to go anywhere, if you think the market is bottoming out and you want to buy opportunity, for the last several years, the buy opportunity has been in the tech space. And this is supporting it with a weekly chart. If you look up here, this is having an inside week. So in order for this to break down, we would have to break below last week's low, which is around 137 something. So that's the area that you're going to be looking at here, is around 137.50 to hold. But if we go down here to the real motion indicator, this is showing on a weekly basis that even though it's back under the 200, that same support around where we can see last week's low also happens to come in the 50 week. Now, would I do this necessarily on a Friday? No. I'd probably look to this as part of my plan for Monday if the market can find support, which includes XRT at 40.50, and then, of course, IYT if it holds around 150, and this if it can hold somewhere around 138. Now, if we take a look at the same chart on a daily, It looks a little bit different. We had actually almost like a double top here. This high and this high was very similar. It was like 154.75-ish. And again, the big gap below 150, breaking down under the 10-day moving average. This is in a bullish phase. Here's your golden cross down here. So another interesting situation is if it does break down under that 137.50 level and under 140, would be to see if this can get some kind of a move back down to around the 200. Now, compared to gold, interestingly enough, this is still outperforming the gold, although clearly worse in today. So that's another reason why semiconductors have been a really good place to go on corrections. And then look at this, on the daily real motion, it's sitting right on the 200. So to me, the clearest of what I've showed you so far would be the retail sector at that 40-50 level, and the semiconductor sector, if it can actually hold around 137, 138 or last week's low. Now, this happens to be my favorite character in the Modern Family, and I wrote a blog about this one too, How Prodigal is the Prodigal Son, because the prodigal son has been so reliable. If we look at 2018 at the end of the year, while everything else was making new highs, this wasn't, and actually was the first one to break down under the 50, while the SPY was still rocketing to new highs. So once again, KRE, which is the regional banks, showed us well ahead of the curve that things weren't so great. Then again, if we segue here to the big crash that we saw in February, March, this actually broke down here. And this happened really right before anything else broke down. So once this broke that 200-week moving average, that was huge. Now, by the way, you'll see it better on the daily chart. So now this, by the way, started to break down, and it's better to see on the daily. So let's go to that before we go through the motion, real motion indicators. On the daily, what we could see is in this big run up, this not only got to the 200-day moving average. Remember, I told you that I was going to show you a classic reversal pattern. This is it. So I'm just going to slow my speech down here for a second. But 4 days ago, we made a new high here. And when I say a new high, not a new all-time high, in order for something to have a legitimate reversal pattern, whether it be a reversal top or a reversal bottom, it has to be a 60 plus new high or new low. Then what happens is the next day it closes below that low, which is exactly what happened 3 days ago, and that's when I wrote the article. Then what you tend to see is a 10% move lower, which means it should have stopped around 40, 41, but instead the momentum was so great to the downside, it broke that 40, 41, and now it's trading down here at 38, with the next support probably being here close to the 50-day moving average or around 36. So the bottom line is this. We're not apt to see a reversal bottom because that would have to be a new 2-month low, which means it would probably have to break this low, and we certainly don't want to see that happen. But what we could say is this made its projected move plus on the reversal top. So if we start to see a move back over, say, 40, that would be a good sign as well. And we could see what happened here. Want to talk about a divergence? This cleared the 200-day on the real motion and never even got up to the 200-day here. So here's a case where the momentum was doing better than the price. These kind of divergences are things that we like to look at. Now, last member of the family here is IBB Biotech. I did a lot of work with you guys on biotech because of the huge breakout it had over a 5-year period of consolidation, and quite honestly is still actually not too bad. It's holding up relatively well. Here's your 10-day moving average on the weekly, so this is a 10-weekly moving average, but the reason why I want to show you the weekly chart is because really we still have support here even down to around 125. So that would be one area. And also if you look at the momentum here on the weekly chart, it's not doing so badly. But if we take a look at the daily chart here, it looks a little bit different. Okay, so first of all, we're below the 10-day moving average. Here is your 50-day moving average. So when I said 125 is really where this started to explode from, 125 now is a really good place for this to stop. And I talk about areas. It doesn't have to be exactly at 125, but that would be a good place for this to stop if this was indeed a 5-year breakout that still has legs. Why is biotech probably a good opportunity if it does have legs? Because this is obviously where many pharmaceutical companies are still racing to the cure, so to speak, or to a vaccine. The other interesting thing here is this was well outperforming gold for months until this. So that's another thing to look at. And also, if we look at real motion, this cleared both of the moving averages here. Look at when it cleared. When you had really an opportunity, even if you waited for the phase change here, you literally had an opportunity to buy at 110 and then sell it somewhere here in this most recent trading range. Now, just the opposite. It's holding here on the 50-day moving average as it's declining. If it starts to turn up, you can then get a risk to around 125. So semiconductors and biotech have my interest, and of course KRE has already did its job. Now let's move on to the SPY. So I just want to show you quickly, I'd much rather look at the daily charts, but I think it's good to compare the weekly chart to the daily chart, because this you can see you had a great reversal where it made a new high this week and now has crashed, but it is holding 298, which is your 50-week moving average. So 298 to 300 is where you want to see this have some kind of support. If we move down here, what's interesting is that on a weekly basis, this hasn't outperformed gold in quite some time. And in a real motion on the weekly basis, it got right to the 200 and started to show a divergence almost immediately. So this real motion, when there's a divergence, sometimes gives you really good information. Now, if we look at it on a daily, I told you I was also going to show you an example of an exhaustion gap. So this is an exhaustion gap. It is not an island top. An island top means that it went to a brand new high, gapped up, gapped down, leaving literally an island at the top. And of course, the reverse would be true if it was an island bottom. It would make a brand new low on a gap down, gap up the next day, and leave that island. And it could be a one-day price pattern, a two-day price pattern. An exhaustion gap means exactly that. It gaps up, it gaps down, but it is not on any kind of particular new high. It's just after a big move up, it also signals the end of the move. So that sort of answers the question here is if this is the end of the move. Well, for one, we probably would not see this get back over 313. And for two, it would break down under this 200-day moving average. And if it breaks down under 298, I don't want to guess where it could go, but I would say if I had to make a wild guess, based on everything else I just mentioned to you, if XRT breaks 40.50 and biotech breaks 125 and semiconductors break 137, I wouldn't be surprised to see around 275 in this. And if we go down to the real motion here, we're just under the 200-day moving average. We will have support down below, so that's something else to watch as well. Now, the last example I wanted to show you of a textbook classic pattern is an island top, but you're not going to see it on the NASDAQ weekly chart. What you're going to see on the NASDAQ weekly chart is the other one, a reversal top, like what I showed you with KRE. So with KRE, I showed it to you on a daily chart. This is what it looks like on a weekly chart. However, it means it has to confirm. So you have a new high, in this case a new all-time high, and whatever the low is for this week, which I would imagine was established with today's low, then if on Friday you have a low close under today's low, then essentially what you can do is you can take about 10% from the high to measure what you think the move might be. So the high here was like 245, so that would be $24 from 245, which means it sounds so much worse than it is, but it means that this can go down probably somewhere to around 222. Now remember, with KRE, it's made more than a 10% move down, but that's often a good parameter to watch. And of course, on the weekly chart, the momentum is turning down, but it's still really strong, and it's still outperforming gold. Now, if we take a look at the daily, this is your classic island top right here. Gap up, gap down. 2 days to confirm. So that means by some miracles of miracles, this low, by the way, because I wanted to make sure I had the accurate low for you, was 244.51. So unless it fills that gap to 244.51, and hey, anything is possible, then we will have a confirmed island top. That means to me that with everything else I just told you about support levels, if this thing continues to jet fuel lower, then I'd say we would probably be looking at a move maybe closer to the 50-day moving average right here, or somewhere closer to around 220. So that's another thing to look at. And again, even with today, if this turned around and cleared 244.51, you never know. It would also show you that you have this indicator here. Whoops, it just switched back to weekly, sorry. You had this indicator here that the momentum has waned, but not nearly as bad as the price performed today. And I'm going to skip over DIA because it's not as interesting and I want to make sure I get to everything else. But on the daily chart, I'll just say quickly, this too is a classic exhaustion gap like we saw in the SPY. Also breaking down on the momentum, but holding on to a Bollinger Band here. So the bottom line is this could have been a very damaging day, but if we don't get some immediate follow through, then we can actually start to look for some support levels. And again, particularly in the retail, the semiconductors, and the biotech, and of course the NASDAQ. Now let's take a look at VIX. VIX is very interesting because not only did it have a reversal bottom, and this is what I wrote about, it made a new 60-plus day low and then closed above it the day after, and it was all against the 200-day moving average. So here was Fed Day, which of course has a little bit of volatility within the volatility, and today was the rocket ship up. It actually traded as high today as 42.30. Now, what's interesting to me is this is outperforming gold. So even though gold is a hedge, VIX is a better one. But look what happened on the momentum today, right to the top of the 50-day moving average. So that's another piece of evidence that unless we get a really good follow through tomorrow to the downside, maybe this was a one-day damage. Would I jump in and buy? No, but I would certainly plan for what I might be looking at for Monday if the market continues to hold. Now also, let's move on to the bond market here. This is the Treasury bonds, the 20-year plus. This was also obvious to me with a reversal pattern. New 60-plus day low, close above it the next day, clears the 10, but now you're going to have some resistance right here at 165. On this though, however, look at this, starting to outperform gold just a teeny bit, so that's something to keep an eye on. And this ran right to the 200-day moving average. So everything is at this interesting critical level. If the market continues to fall, this will probably clear that 200-day on momentum, probably clear the 50-day moving average, and then we can start looking at 170. If the market holds, then you would see this back down on momentum, not clear this 50-day moving average, and possibly even give a new short opportunity. Now, I wanted to show junk bonds because I did a lot of talking about junk bonds when the market crashed, because the Fed came in very clearly that they were going in and buy junk companies, bonds of junk companies. And that's one of the reasons why you saw the bottom in the market here and this continued to explode up. Now you had a break under the 200-day moving average. Let's just go down here. We also had a break of the 200-day moving average and the momentum sitting right on support. So 100 is a big area in the junk bonds. It broke out from 100 and went right to 105, which by the way was just kind of filled this gap from here before the big crash. So you got to keep your eye on junk bonds, because if it breaks down under 100, again, not a good sign. If it holds 100 and consolidates along with every other evidence, perhaps a better sign. And the other one is the high yield and the investment grade corporate bond, which the Fed was also buying. Now look, we'll go to the momentum first. Just breaks down under the 200. The 200 day moving average is all the way here. But this too had a range. This, by the way, has to hold around 130. 132 is pivotal. And of course, the all-time high here is up here at around 135. So another thing, to see any evidence of the Fed coming back in, it would have to clear back over 132 and back over that 200-day moving average in the real motion. And finally, in terms of safety plays, looking at the gold, We've looked at this gold so many times already. I told you to buy dips, sell rallies, and if it clears 165, just close your eyes and buy. I still believe that. Right now, we got back over that 50-day moving average. We're holding the 10. Not a great stick today. It should have done better. So I'm looking at 162 as one level and then 160.40 as a better level. If we're looking to buy dips, if it holds that, you would have a very quick risk under 160 to kind of get right out. And if it holds 162, I think you have to watch your risk reward, because at this point, I would just almost prefer to wait for it to clear 165, especially when we look at the momentum indicator. It came back from when I showed this to you last time, but it hasn't cleared the 50 and it backed down today. So you either have to buy the weakness in this with a tight stop, or just wait for this thing to finally get going. And there are so many predictions of $2,000 in gold, $2,200 in gold, $1,800 in gold. Quite honestly, that makes me nervous. I don't like when too many people crowd into one instrument. I also thought it would be good to show you oil, because oil is a big part of two things: part of a possible stagflation environment, and also obviously part of really discovering what kind of economic recovery we're having in terms of oil demand. And so oil has been obviously rocketing up since we bottomed out here after we went below zero. That never really happened. And yet at the same time now, we're having a strong recuperation phase. We're far from the 50, but we broke down today underneath this 10-day moving average. So I would like to see if this thing can get back down somewhere around 1250, 1240. That would be an interesting situation with a risk to under the 50-day moving average. Or in here, I would do nothing. It's too choppy. Buy it if it starts clearing 15, because then it looks like it would get up to the 200-day moving average. On the momentum, it's actually no divergence at all. It never quite got to the 200, nor did this. It's coming down, which of course we will with the price. Here you have a Bollinger Band, and it's pretty far from its underlying momentum indicator at the 50-day moving average. This is wood. I wrote an article about this yesterday. Now, wood, even though it's a commodity, it's more of an economic indicator type commodity. And what I wrote about yesterday was that it was starting to underperform the gold, or at least it was turning from outperforming the gold. People look at wood as a big economic indicator because wood obviously reflects an economic recovery, particularly in the housing industry. And so for a moment there, it looked like things were great. It cleared the 200-day moving average, but notice it never outperformed gold here. Even then, it was outperforming it in terms of the moving averages, but it never cleared this long-term line. The last time this really did that was back here when it was trading up in here. So since then, even though it's gone up and outperformed gold on a near-term basis, on a long-term basis, it didn't. And now it's breaking down even further on the momentum right here. You've got the 200-day moving average. So again, will this come into support? The 50-day here and the 50-day here? That's something to keep an eye on. But this is a good thing to look at from time to time, because it really is almost a secret indicator of what the real economic recovery looks like. Now for my final trading recommendation. As you know, I love commodities. We are still long gold and silver. We are long sugar. We are long soybeans, all of which we are in the money with trailing stops. So we're not planning to take a loss, but I'm always looking at new opportunities. Now, remember, I told you about a reversal top. We looked at it when we looked at the KRE, for example, as a reversal top. So this is the opposite. This is a reversal bottom. Now, not as clean, because we have to look at JO. JO is the actual ETF, but if you want to look at it more carefully, then take a look at KC, which is the actual coffee future contract. That made a new low today and then closed up. So what I would like to see happen with this right now is I would like to see in JO a close over Thursday's high tomorrow, and then you would have a risk to under 30, because it looks to me like not only is coffee bottoming, particularly if you look at the futures, which did make the new low and then close near the highs, that would have to clear, by the way, around 39.20 in terms of the futures, KC. And if this closes above, I think it's 30.60, and holds 30, you have a tight risk. You can do a small position. And what's interesting about coffee right now is that in Brazil, it's actually their winter. You get any kind of frost, it's worth a half a buck of a risk to see if we get a frost or anything like that, and this turns around and goes much higher. Okay, that's it. I hope you enjoyed. I'll talk to you soon. Bye for now.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.